Welcome back to my trading vlog, where most of the views come from returning subscribers. If that's you, I'd appreciate a thumbs up. If not, consider subscribing. We're going through a lot today, at least SPY, AMC, GameStop, Tesla, Bitcoin, and PLBY, maybe NVDA as well. I think I saw something I wanted to share there. Thank you for the support on Twitter. I'm recently starting to share on Twitter as well. So, Edward T-Man, thank you. I see you guys there, and you too, Christian. Let's get going. SPY on the hourly time frame. You're going to see that we had a big push up today. The RSI is now starting to reach overbought. This might mean that we're at the end of a corrective trend, which has been kind of awkward. You can see that I have a small motive wave count here to some degree, and it ends at this dip to 435, and the price bounced from there. This is interesting. There's a channel through here for sure. I truly believe, though, that this has been a corrective phase. And this might have been some sort of diagonal. It could be a channel. It's really hard to say when you get a lot of price overlap like this. Difficult to call it motive, but definitely corrective. Looking at the RSI, I want to say we have A maybe pushing up, A wave coming to that bullish continuation level and rejecting, passing below bearish reversal and continuing lower for wave B, and this could be wave C. So oftentimes the last wave in a corrective wave, whether it's E or C, it can be very exuberant and you have a lot of momentum and people get really excited and say, hey, this is the bullish reversal, but actually we haven't really had a bullish reversal yet. Hitting that bullish continuation level again at 436 today, finding a high on the intraday chart at 436.81, spilling down and closing below bearish reversal at 435.94. The price is battling with resistance. Did I call this head and shoulder top forming? I did. I absolutely did. We've had a breakdown below that neckline. Now the price is pulling back up above there. So the chart pattern analysis isn't going to be the most productive thing right now. I want to say the Elliott wave study is going to be still targeting 430 and 425.77. Yes, big bounce today, but big bounces occur in bear markets too. Okay, that was too much time on SPY. Going to AMC. I haven't really looked at this chart much. You can see that AMC came down to that 403 level and landed. That was a target on the sub-mini wet degree. We've confirmed a wave C confirmation passing below 450, which means we're still looking for a lower target. This bullish divergence in the RSI is holding. Now, the longer the price remains in a tight trading range, the easier it's going to be for the RSI to break through that. This signals that we're in a flat correction, which probably means we're in the last corrective phase of a motive push down. I would expect that to be bringing us into our lows at 367 or 358. Personally, I think we're going to get the extension down to 270. The MACD here is starting to swing up, still in bearish territory. Implied volatility is flat. Volume, not so great. I want to take a look at the daily candle. I haven't looked at the daily candle yet on AMC. It looks like it was a small green, just bouncing. This is a big bear flag, to be honest. If we break below that 403 level, we could even make an extension target with a flagpole starting at 508, coming down to another dollar. Wow, we could put a dollar downtrend on here as a target once we pass 403, bringing us down to 303, very, very near that 270 target. On the daily time frame, you see the RSI is starting to come up out of oversold just a little bit. Don't worry, there's still a lot of opportunity for the RSI to come up to 70 if we get a corrective bounce. Volume today was above the 30-period average, which is pretty good. MACD looks bearish still. Not looking so great for AMC. It's not really. Going over to GameStop. I've been saying that we're looking for 2081. Today we had a small bounce up. Yes, that may be called a hammer. If you want to call it a hammer, you probably could. But remember, we're going to need to get a daily close above or below that candle in order to confirm that. MACD is still looking bearish. Implied volatility is still dropping. Volume was low today, and the RSI flexing up, but still not above 50, sitting at 49.52. It's too early to say bullish reversal here. This to me looks like it may just be a corrective bounce and another push down. Looking at the candlestick chart, I want to say I see 1, 2, 3, 4. Looking for wave 5 to reach that target at 2081. Moving into the hourly time frame, might be a little more clear. It's not. There could be an ugly double bottom through here that we could say has confirmed, and we're going to push higher, but this is a very small pattern with a range of only from 2404 to 23, so like a dollar range. I think the ugly double bottom target's like 70% of that, and that would be applied to the top peak here at 2340. So maybe looking for 24 on the high end for that target. We didn't quite get there. There could be a little more upside here in GameStop. Perhaps on the hourly time frame, we see the RSI reach overbought before we finish the corrective bounce and head lower. In some cases, reaching the overbought level in the RSI is not bearish at all. I think in a corrective bounce it is, because it signals the end of that corrective wave. Moving on from GME, we're going to look at Tesla today as well. Bouncing off of that gap fill zone. I'm going to go into the daily time frame here, get an idea of that candlestick chart pattern here. Looks like we could have what's called a tweezer bottom on a daily time frame when you have the price reject at a level of support. We can do a small double bottom price target, and that's what that is. You can see the volume is starting to come down since it peaked at that high we set on June 21st. This yellow line you see coming through my volume bars, that is the 30-period average. That's what I want to follow, is that average. And the average is still rising. Very possible that we start to see that turn around. And when that does, we can expect bullish momentum to end. The MACD has swung into the negative side of the indicator, looking for more downside, I think. It's possible that we come in for another top. It's possible that we come up here and we set a double top or a truncated fifth wave. If you know what that means, it just means that in our mode of wave C, wave 3 peaked higher than wave 5. Very bearish. It looks like this gap zone hasn't filled, and I don't even have this gap zone drawn right. Honestly, I'll have to fix that. Still some more gaps to fill down below as well. We could be coming down to at least test this downtrend. After a magnificent, mighty bullish push like that, you should be expecting a retracement of similar amplitude. Similar amplitude, not the same amplitude, but similar amplitude. A percentage of that big move. This small push down might be the first small push in a larger measured move down, which will be complex. There's going to be a lot to go through here as Tesla corrects to the downside, and we could even see a new high set in that corrective process, in which case we'll call a bull trap. At this point in time, though, we're finding some support and resistance. We need to keep a close eye on this. I think by the end of the week, we'll have a good answer. Let's go look at Bitcoin. I haven't looked at Bitcoin today. And I gotta put the / in there because I actually am looking at Bitcoin futures on TD Ameritrade. We're trading between 29,300 and 31,300. I went into some detail here the other day about these price targets and how we got them. This negative 176, this is actually a ugly double bottom target, which I applied the Fibonacci tool in reverse to do that. So that's the price target, is plus 76% from the peak between the valleys of the ugly double bottom. You can see that we had a massive handle here in a reverse triangle. Price pushed out higher and eventually reached that 31,345 target. It took months. Remember, when I'm talking about these trends, I'm putting targets down. The length of the pattern matters a lot, and sometimes it takes a very long time to reach those targets. It's important to be patient. I want to do something really quick on the RSI. You can see through here that there was a bearish divergence. That's a loud truck. You can see that the RSI is setting lower peaks through here and the price is setting higher highs. Bearish divergence, typically, when you see the RSI break a divergence, it's setting a significant high or a significant low. Here, we broke that divergence right here. You can see that the price is setting a higher high. This is a significant high. If we continue to run into overbought from this point on, then we're going to start putting some very, very, very bullish price targets down. It depends though. This is the line in the sand, 31,345. That's my technical target. If we break that level with volume and we get a strong three-wave push, then we're going much higher. I think just on the short term, we can look at these candlesticks here from this recent rally, and we can say that we're even in a high and tight flag. A high and tight flag is better than just a flag. It performs better per Bulkowski's chart pattern analysis, and we would be doing a simple extension tool through here to find that target, and it would be at 37,095, and that confirms above the top of that flagpole, which would be at 31,655. Still a long ways to go before we see that price broke, and the RSI is going to be hitting oversold or overbought quite a few times through there. That's what we're waiting for on Bitcoin. For right now, we're just watching that key level, 31,345. Moving on to NVDA. We had a spill below that 419 level. That was what I was calling bearish reversal. And today the price came back up and is testing. It is testing that level. Again, I would expect to see NVIDIA hit the target at 473.89 and then reverse and to form some sort of rising diagonal through there. You can see that I'm already trying to fuss with the chart pattern I'm looking for, but it looks like it's coming in. Looks like it's coming in which case this might actually happen out here. This is always conceptual. Just remember, when I'm drawing lines where I think the price is going to go, it's all concept. It's not literal. We will eventually, I believe, reach target and then see reversal. You see that there's a bearish divergence forming here too, and I'm waiting for that divergence to break, set that significant higher low. And we actually saw that on SPY. That was a good example. I didn't go into it. But on the hourly time frame, you can see it here. I even labeled it. There's a bearish divergence that occurred between June 12th and June 14th, and when that divergence broke, you can see the RSI pushes through here. That's when we set that high in SPY before we started heading lower. Once the RSI reaches the other side, the other extreme of the indicator, I reset all my divergences and say, hey, we're done with this. But it's curious, you can even kind of extend this down. You can see how the RSI spun along that trend line. Isn't that interesting? You can observe moving averages in the RSI because the RSI is an expression of averages, average moves over a period of time. Moving on to PLBY, this is an exciting one. I was really happy to see PLBY today reach up towards the sky. Yes, that looks nice. This is starting to look like a V bottom, typical after a vertical run down, which is typically on the daily time frame. It's going to look like a waterfall. Just look at this, the price cascading down. And we could even say that we have an evening, maybe a, no. This is not a real candlestick chart pattern, but I think if you understand the way that candlestick chart patterns express price movements, you can easily see and understand that this high wave candle was a bottoming candle, and now we're seeing the bounce, the reversal. Technically, it's probably a dead cat bounce, and we could do that price analysis on that chart pattern. We came all the way up to that bearish reversal level at 166, tagged it and rejected, but closed high on the day. The RSI is now flexing up, and volume was low. Implied volatility is ticking back up, which is what I want to see. I want to see the implied volatility and the uptrend to be positively correlated. When an uptrend positively correlates with implied volatility, that's where you want to start being aggressive, or, you know, you do you, I do me. I've been holding this for a long time, so whatever. MACD is starting to look like the bearish momentum is shifting. We're going to be going back to a bullish price trend here, I think, very shortly. I have some pretty high price targets here, given that we're only at 164. Once we get above 195, we're going to confirm some price targets at 209, 234, and there's another one up at like $3. There's a gap zone up there. I'm waiting for some very specific news to come out about Lovers and what they're going to do with Honey Birdette and Lovers. Those two companies are driving a massive loss on the company's balance sheet, and getting rid of them would put the company into a much more cash flow positive situation. Okay, I don't want to make this too long. This is all I have for today. Happy trading.